Hey, welcome back to Oz.Fx, and I know it's been a little bit since I've done a video, but we had some holidays, and I just haven't had a lot of time to make videos. But no worries, we're back at it today, and before we get into today's video, I just want to say, moving forward with this channel, my videos are mostly just going to be about whatever I feel like making a video about that day. I don't necessarily want to make a course to put out at the moment or anything like that. I just kind of want to break down different concepts as I feel like breaking them down. I'm going to kind of try and keep them in order and keep like the thought of a beginner in my mind. But at the end of the day, there's so many concepts that starting from the beginning, there is already a lot of videos out there on a lot of beginner stuff, right? So I just kind of want to move forward and just make videos about what I want to make about, because at the end of the day, it's my channel, and hopefully what I talk about helps some of you, and if it doesn't, I'm sorry. I want my channel to be all about a place for traders, by traders, you know what I mean? That's just the kind of philosophy that I like to go by with this industry. I like to trade with other people. I don't like to trade for other people. Not that that really ever happens or ever did happen to me or anything like that, but I see it happening a lot. I see a lot of lies in this industry, and I just want to be strictly about trading. That's it. If you want to be a part of my community or my group, I will have links in my description down below to the Telegram, and from there you can get into the Discord. But other than that, let's get into it. Today I want to talk to you about retail trading patterns and why they are traps. As you can see, I have a candlestick cheat sheet here. Now this isn't really the traps right here, but this is mostly just price action. Like this morning doji star, how many times have you seen that fail? In shooting star, dumpling top, evening doji star, the bearish belt hold. I mean, now these are all still like bearish candlestick patterns, right? But are you going to trade on this alone? No. Tower top. Let's see here. Don't get me wrong, you could use these, I guess, if you want, but don't use these alone. Some of the stuff on this sheet right here actually could be a little bit helpful, but most of the stuff on here I don't use. While I have this up here, let's just talk about what is price action. Price action is just the movement of a specific asset or security over time. Over the years, there have been many teachings on retail price action patterns, and if I scroll down, you can see some of them here. You got double tops, head and shoulders, rising wedges, double bottoms, inverse head and shoulders, falling wedges again, apparently, and they look different. So bullish rectangle, bullish pennant, rising wedge, bearish rectangle. This is just how price moves, literally. But you need more than this, in my opinion. This isn't enough right here. Like, if you literally are just going to sell because this little inverse head and shoulders popped up, I mean, buy. I guess this is a buy pattern, right? If you just want to buy right here with this entry here without knowing what else is going on, that's not it. Now, those of you that are already familiar with smart money, you already know what I'm about to say. But for those of you that aren't, or for those of you that are retail traders and don't know about smart money, which I don't know how you don't know about smart money by this point. There's so much smart money spewed all over the internet now. But for the retail traders asking why I think these are traps, my answer to that is, without getting too deep into the nature of smart money in this specific video, the answer to why these are traps is because the banks manipulate the market. What do the banks manipulating the market have to do with these patterns right here? Well, think of it like this. If the banks manipulate the market, that basically means that they control the market, right? So if they control the market, how are they going to manipulate the market? They are going to manipulate the participants of the market. That's me and you, everyday retail traders. Even smart money traders are retail traders because of the amount of money that we trade with. The banks know that these patterns, these simple looking patterns that even my son could probably recognize, are taught to the masses. They know that you can get on Google and look up Forex trading patterns, and all this stuff pops up. And they use this to their advantage. A lot of the time, a retail trading pattern will start to form, right? Causing retail traders to start entering trades or just form opinions or enter pending orders or buy stops, sell stops, whatever it is, doing it early, resulting in manipulations by the banks because the banks can see their orders. I'm not going to focus too much on the banks or manipulation today, but this is my opinion on retail trading patterns and why you should not use them. Instead, you should wait and see them to like how they start to form and wait for them to be manipulated. This isn't to say that retail trading patterns don't work sometimes, because they do. You can make money trading a falling wedge right here. You can be successful with any strategy with the right risk management. I'm sure you've already heard that before, but it's true. That being said, 95% of retail traders fail. Look it up if you don't believe me. It's a pretty common fact. A lot of people know that a lot of people lose money in Forex. That's why people nowadays are calling it a scam when they're just uneducated. So some key points: research the masses and do the opposite, right? Retail price action patterns are traps. Smart money knows that the mass majority of people learn these patterns and typically use the consolidation periods to build up orders, normally showing some kind of retail pattern in the consolidation to trick retail traders into thinking they are correct. That looks like this one right here. And I actually do trade this pattern right here, but I don't call it a bullish rectangle. I don't trade it the way that they say either, right? They're getting in here, I'm getting in down here. And most of these retail patterns are actually based on human psychology. These head and shoulders don't form because they want to form a shoulder and then a head and then a shoulder. It's because this is basically a 3-price move right here. This is you got a swing low, and then you got your swing high somewhere else on the chart. So what can you take away from this video? I guess the best thing that I could say is to just go to your charts and look for retail patterns. Look for these double bottoms. Look for these double tops, and look for the rising wedges. But instead of going to your charts and looking for them to take trades off of them blindly, look at what happens when they form, and document the win rate on every single head and shoulders, every single rising wedge. Just and come back and tell me what your results are. Now, I know you're probably thinking that I can't just show you what kind of patterns don't normally work or why you shouldn't trade these patterns and then not tell you what to do. All I can really say at this point in time, without going into making a whole nother video, is that I trade smart money, and that smart money is the best approach that I found to trading the markets. And that being said, there isn't just one way to trade smart money, and anybody that tells you different is a liar. We will go over elements of smart money in later videos, and more videos are going to be dropping in the upcoming future. Man, you guys can really tell that I do not script these, right? I'm terrible at speaking, if you haven't noticed. But I'm passionate about what I do, and I'm passionate about trading, and I want to help people be informed about Forex before they just come in and start blowing money, and I don't want people to be taken advantage of either. So that being said, everything that I do is for free, and we will continue to cover the Forex market until the next time. I'll catch you later.